All right, welcome to the next section on higher highs and higher lows and identifying trends. The most important thing we want to remember is that there are three things price can be doing. It can be going in an uptrend, in a downtrend, or in a sideways consolidation, which means there is no trend, right? A non-trending market. In an uptrend, the easiest way to identify is just a basic, naturally you'll be able to identify an uptrend when you look at a chart and you see price moving from the bottom left to the top and to the right. You want the price to be moving up and rightwards. Okay? Conversely, a downtrend is quite the opposite. I'm sure you guys already know that a downtrend would look something more like this. So a bearish trend would be when price is moving from top to left to down and right. Okay, that would be a bearish trend when sellers are in control of the market, and in those situations you would not want to be looking for buying opportunities. Okay, you would want to be looking for shorting opportunities. You always want to trade with the trend. Right now there are some successful counter trend trading systems, but again, backtest those and make sure they work in your respective market. I recommend backtesting. We'll have a chapter on backtesting later on before you do any kind of counter trend trading. So you always want to identify the trend and trade with the trend. This is clearly an uptrend because it's going up and to the right. Now up and to the right is not enough. How do we identify exactly how a trend is an uptrend and exactly when an uptrend finishes? That's by identifying higher highs and higher lows, because if price is going from bottom left to top right, it's making higher highs and it's making higher lows, and as long as we see that, we know that the bulls or the buyers are in control of price, and we can either buy and hold until that trend is over, or we can trade and look for more trading opportunities long with the bulls, with the buyers, and with the trend. Okay, so what do I mean by higher highs and higher lows? I'm going to show you. We're going to grab a horizontal ray right here, and we're going to put this right here. Because at the start of our chart, we came up and we made a high, right? This is as high as price went before it came down and then made a low, right? So we're going to start off with a first high and a first low. I'm going to go ahead and draw the low one red so we can differentiate them. And now what happened? When price came and made this low, it then rallied, broke the previous high, the previous resistance, and breaking the previous high is always a bullish sign, right? Some traders are breakout traders and they like to trade breakouts, which means breaking the previous high. Again, previous resistance becomes support, as you saw in the previous chapter. So you can see this wick, they retested that level, but either way, this is a bullish trend, and price went on to make a higher high right here, right? Now it doesn't matter if you say this is the higher high or this is, but this is the impulse move. This is this makes more sense here. We're gonna go over the difference and why it doesn't really matter anyways at the end of this, right? So we made a higher high right here, and this was not the high, and because price started to pull back. How do we know it's the high? Because price pulls back. We see more than one red candle in a row pulling back and leaving that high alone, and we know that's the high, and we are now in a pullback consolidation. These are called pullback consolidations, right? Then what happened? Price made this higher low. So we're still making higher highs and higher lows, right? We found the low here. And guys, why is this the higher low and not this? You can say this is a higher low, right? And then this is a lower high, and then this got broken to the downside and it's invalidated. But the thing is, the trend is still strong and the trend still stands as long as you don't have a lower low. This is not a lower low because the last low was the low here, right? So as long as the low holds, it has to be the opposite. We're making a higher high, and you can have a higher low, and then you made a lower high, a lower low. I'm sorry, but you didn't really make a lower low until you broke the previous lower low on chart before the impulse, right? Because this was our previous high. So it's only when price broke through here, we now made our new high. But we don't move our new low until it's either broken to the downside. So the bears have to break this level, or the bulls have to break the new level, right? So the bears never broke this level, so we made our higher low. Price made a higher high, right? We made a higher low. Higher high. Higher low. Higher high. Higher low. Let me just zoom in for you guys here. Higher high. higher low, and guys, you have to close below the low, right? This is the previous, this got kind of close, but it didn't get really close because it was only a wick. You have to close below the level to really confirm that the bears are taking control of price. So this is the higher low. You can see a higher high right here, higher low, higher high right here, the most recent high, the all-time high, and we have put in a higher low, right? Now, this is the most recent all-time high, and we're still making higher highs and higher lows, so the trend is still bullish, right? Until we break the most recent low, the trend is bullish. So in this particular crypto, ADA USDT or Cardano, you want to be looking for buying opportunities, not selling opportunities. You do not want to short a very bullish market, just like you do not want to buy a very bearish market. So ask yourself, who's in control of price? Well, on this 4-hour chart, and each time frame it's its own thing, right? You might have a bear trend on a 5-minute time frame because you're going down from left to right, but that only covers maybe 1 hour or 2 hours because 5-minute candles. But in this 4-hour, in this trending market right here, in this time frame, the bulls are in control of price, and they are also on the daily and the weekly. And so you like to do top-down analysis and find that out. But as long as the buyers are in control of price, you want to be a buyer, right? And you want to trade at Fibonacci pullbacks. We're going to talk about that in a later chapter to capture the best value. The best value. You want to buy, but you want to capture the best value, the best price. You want to look for a good deal, right? And again, this is a bit premature because, like I said, the last low still stands here because this was the most recent high, right? Now, and the most recent low. Now, why is this not the high? This lower high right here, because we haven't broken it yet, right? So this pullback right here, this can't be a higher low yet, right? Because we haven't even broken the previous high yet. That's the thing, guys. People get confused about this. It's here on this breakthrough with this green candle that we broke through. So we stopped up here. This was the most recent high. And again, we're still waiting for the higher low to be formed. We can't really move. I can move it prematurely, but I like to leave it here actually because, in fact, we're still making higher highs and higher lows until the most recent low is broken. So if this finds a bottom here and continues to go up towards making that higher high, then we made a higher high and a higher low. And once we break these highs, I'll move my red line up here because we made a higher high. So this was confirmed as a higher low. And then we go to make our higher high, right? But until that happens, I like to keep it at the most recent low because, again, when the trend becomes undone, when sellers take control is when they can make a lower low, right? We can only confirm after price breaks either the most recent high or the low before that, right? All right, guys, so I hope you understand higher highs and higher lows is for a bullish trending market, and conversely, lower highs and lower lows is for a bearish trending market. And just to give you a sight, because crypto is very, very bullish right now, I came here to the USD Canada time frame right here, and you can see for the past few months or so, we've been in a bear market, right? All right, so this is a good example. You can see we were bullish before that, and we had a higher high, came down to what we thought was a higher low, right? Came down here, and we could have moved this prematurely, but the line should be here. But, you know, higher high, we thought this was a higher low, so we can move this, but we can't really move it until we break the higher high, like I just said. But it turns out, you know, this got violated, eventually broke down. And so we did first make a lower high, came down here, made this low, came up to make another lower high, broke the lower low, made a lower high, broke the lower low again, and etc. We're continuously in a bearish trend here as the dollar has been selling off for the past, you know, year or so at this point. All right, so just wanted you guys to see that. In this case, I would actually have the top line, the resistance line, red, because it is where we look for shorting opportunities or selling opportunities. It's where the sellers live. So In these kind of bear trends, I would actually like to label it the opposite way, but that is a bear trend just so you guys can see.